This is Michael Arias, and today we're looking at the Dow Jones Industrial Average Index. And I'm just going to explain to you the D wave I see still unfolding within the correction that started in 2018. Right, so we had an A, B, C, and the D wave, I believe, is still unfolding. So I don't think we've seen an end to that particular wave. I did at one point suggest that it may have ended and we're going into a deep retracement down. However, just taking into consideration a couple of things, especially the latest US dollar analysis updates, for me, it's a case of the last year being purely corrective for the internals of the B wave in brackets. And what we're seeing now is the start of a move that should be roughly the same length as the A wave in brackets, if not slightly longer. That's how these D waves tend to work. They are a deceptive wave. The D wave turns out looking like the start of an impulsive move because they do have basically the same waves at a glance. But when it basically stops going higher and it basically produces a blow off top, this is the kind of thing that I would expect to see at a high, at a top, to then see the start of the E wave down. Right, so in corrections, there are two zigzags that move higher. It's the B wave and the D wave. So obviously the B wave was kind of smallish right before 2020 crash in C wave. And as you can see, the C wave started off fairly sharp, right? This is the kind of move I would expect to begin a crash. And that's the sort of move I would expect to happen once we hit that high, right, of the C wave. Then the D wave should then basically take this thing much lower, potentially to the previous fourth wave, just for measurement sakes and just to have an idea of roughly what I'm thinking. Wouldn't be surprised if it goes down to around, midpoint would be, let's just say 15,000, right? Now that's 66% decline from that high. So yeah, that doesn't mean anything. It could go lower. I don't think it'd end higher, given the type of strength that we're likely to see in the US dollar over the coming years after this fairly big pullback to the downside in the US dollar. I think that will basically spur this last move higher in this D wave for the Dow Jones. Right now, whether or not this is a similar sort of thing going on in cryptos, I don't think so. I really doubt it. However, my analysis is ongoing and I'm always looking for anything that might change that view. And so therefore I would provide updates in a timely manner if I saw something like that turn out to be the case. This is kind of in line with the US dollar scenario, and it's all based on probabilities. There's no certainties. It's just something that appears to be correct. So the internals for the B wave would be the same once again as what we're seeing for the whole move, because it's the same kind of correction but at a smaller degree, right? So we've got the A, had the small b within there, and then we had the C wave roughly when the elections were, and then the D wave within the D wave, I believe, ended at those highs. And then this move down since January 2022. I believe it's an E wave, right? So that there would mean that it's the end of the correction for that zigzag. And look, you kind of do have to wait a while before you continue analyzing a market. I've been very patient with waiting for a good opportunity to sort of pull apart the internals for this one, simply because of its complexity, and also because there was a missing piece of my analysis, which ended up being the US dollar, updated views, especially when you look at that US dollar and the euro charts video that I did. I'll link them down below. I think those things play a major role in trying to understand this pattern. At the same time, the pullback that happened here since the end of wave A, seeing as though it came back to roughly where wave A ended, for me that's a type 1 expanded zigzag, simply because the expanded waves then came back down to retest that area, basically like like resistance becoming support, and then in order to produce that final move up for the D wave. So the crash that would have begun, January last year. So yeah, basically now it's January last year, about a year ago exactly. If that would have been a whole D wave there, then this probably would have had a more of a sharper decline to the downside. All right. Another reason why I think this is the case is because I don't think the market is going to produce a massive bull market rally that's going to equal that of which is in length to the move since 2009 to 2018. Right? I just don't think that the US dollar making that move down is going to cause that kind of price action to happen. Um, in terms of time duration, I think that move down in the US dollar will cause this type of move. It's sort of like also in line with wave A duration of time, roughly. Let's just calculate that roughly. About 161 days on that move, right? So to put it the same, 161 days roughly would take this to about March. It'd take it to about March, which is really not that far away if you think about it. So yeah, I mean, to me, if that's anywhere in line at all with what's happening or what's going to happen in the in Aussie dollar up, that's going to have to be some really big move, in a short space of time. So it's just interesting, because is that really possible? Obviously, only time will tell, but I don't know. It's just very interesting. Yeah, the waves are interesting. So hopefully you found this video interesting and informative. Thank you for watching.